Okay traders, so welcome back to the channel, and today is a bit of a different video. I just had a trade this morning going into this afternoon that was absolutely brutal, and I'm going to go into the details on why it was brutal and probably one of the most painful experiences in my trading that I can remember. There's probably been more traumatizing experiences in the past, but this was a trade that I actually had today which hopefully never is replicated in my trading and also never appears in your trading either. So what we're going to do is bring you to what actually happened at the start of the session, and then bring you through why the trade was painful and why I think it was very brutal. So what you can actually see is the fact that we've obviously broken to the upside. So if I just mark here where the opening of the London session was, so at this point here, this candle, and we broke the structure. We obviously had structure here, structure here, structure here. All of these points have then been broken by this push up. So if you know my strategy, if you know how I trade, that does mean that we're going to look for a retest in to then buy. The retest on this one was fairly high compared to normal, but again, this was completely normal. And looking back, I probably could have had it a little bit lower, which would have saved some traumatic experiences, but that's completely fine. This trade did follow the plan, so I did enter the trade. Very, very simple. But it was higher risk based on the fact that the move was like this. So I have a lower risk type of setup. You could call it an A plus setup, and you could say the other one is a B setup or just an A setup. And you'll notice that there's certain trades I take on my personal account, certain trades on challenges and funded accounts, and I keep them separate because trades that I want to risk my own money on, I want to have higher conviction. If I would lose $1,000 on a personal account, that's coming out of my pocket. So let's say my net worth is 100K and I lose $1,000, I've actually lost that $1,000 from my net worth, and then it'd be 99K. Whereas if I lose $1,000 on a prop firm challenge or a prop firm funded account, I don't lose that money. And that is why I like having different setups that I can choose between. Ones that have higher conviction, ones that have a higher probability of winning, taking on my own capital. And those are the trades that I will mainly send to the Telegram group. Those trades in that group have the highest possibility of winning out of all my setups. I don't want to send trades here and there, even if it's a high risk one that I will take on one account or a few of my accounts. I want people to have the highest chance of winning. You can check it out in the description. And this trade was not sent in that group because, like I said, it was a higher risk setup. And as you probably see from the results in the group, we do very, very well. And that's because I send the A+ setups only. But this setup, I did take it on a funded account. And that kind of makes it even worse because on a funded account, if you're in profit and then you end up losing, that can be very, very tough. And in this situation, it was very, very tough. So what we actually have here is the retest. So the retest coming down, if I play price on, you can see the next candle, we did push down and we did get tagged into the position. Again, when I'm trading, the main kind of thing you want to see is immediate push into profit. It's not something that invalidates the trade if it doesn't happen, but it is just great to see. As you see, we did get that push into profit, the rejection from the area that we actually broke from, which is a great sign. And we played price on. I wasn't actually on the charts for a lot of this trade. I had other stuff to do, and it was getting fairly later into the session, and we did break structure to the upside here. So as you guys know, I like looking at breaks to the upside, and this was a break to the upside, which was a great sign that the trade was going to go bullish. But then we did retest the lows again, and then what did we do? We then broke structure to the upside again. So already we've been up, down, kind of stuck in this consolidation here. And we do have news later in the day. We have FOMC this evening. We also have a Euro speech, I'm pretty sure, around 5 p.m, so 8 minutes ago. And the reason why I obviously held this trade was, firstly, the majority of my trades, especially the high risk setups, I just hold till stop loss or take profit. Very, very simple, unless we get a proper break to the downside. But at that point, like this one, there's not really any proper structure. The price is broken. Obviously, we had this main structure here, and this was obviously the next main structure. But again, this main structure to the downside did not break. So there's a good sign to hold it. And then when we did break the structure again here, again, another good sign to hold the trade further. And this did actually push up. So if I drag this across, you can see where the TP is. And you can see that there, This is where it happened. And then you see price now. So looking at this from the outside, you could say, oh, well, why didn't you just close the trade manually? You know, you're 0.7, 0.8 pips away from the take profit. But what you have to realize is, let's say I close every single trade 1 pip early, and then over 10 trades, I have then missed out on an extra 1% profit. If you look at a yearly performance of a strategy, 1% doesn't seem like that much. But if you do that over 10 years, you're losing 10% profit. If you're trading with $1 million, for example, you know, if you have scaled up your capital, you've then lost $100,000, which it does seem like quite a lot. It might not seem like a lot looking at the pip value, but when you base it on the risk and the pip value, it can be quite a lot. And I also always speak about holding to stop loss or take profit. Price gave me no reason to close this trade early. So people will say, and I'm guaranteeing people will comment, oh, if it's rejected your TP, then just close the trade. Well, no, because we just broke into the upside for the fourth time of the day. So what does that tell me about the trade? I'm happy to hold a long position if it is actually broken to the upside. But what makes this even more painful is the fact that it happened so quickly. There was no sort of break to the downside, we retest back up, and then that gives me a sign, okay, I can now get out of this position. That did not happen. We just straight melted, and it didn't help that we didn't have solid structure at the point when price shifted momentum. So what would normally happen, let's say I was selling from this point here as a simple example, and then price broke structure to the upside like this with a clear break above the previous solid structure. And obviously people look at structure differently, so you might say it has broken structure here or it hasn't here, but I see it a certain way, and that is what works for me. And it would have been easy to see, okay, I want to get out of the sales. But in this position, it didn't give me any solid reasoning to get out of the trade up at this point anyway. Especially when we're so close to the take profit, you guys will probably have it many, many times in your trading where price comes close to your TP, close to your stop loss, and then goes in the opposite direction and you end up winning or losing that position. It does happen quite a lot, but I don't usually have it where it's so close to my TP and then loses. That's why it is probably going to give me PTSD every time I enter a trade now and it's close to my take profit. And what has actually happened to me over the past 2 weeks, we've had it I think 2 or 3 times, is price will come very, very close to my entry point. Coming close to my TP and I'm missing out on the profits. No, the trade will come close to my entry and then hit the take profit. It's happened a few times recently with my A+ setups. Telegram group, it's been very, very annoying. We obviously, the last few weeks we've been winning, but we've missed out on some really, really good setups. I think 6% in the past week has been missed out just on 0.5 pips away from my entry, which is not great. But like I said, if you're every time entering a trade or closing a trade, you're adding that 0.5%, you're adding that 0.5 pips or that 1 pip extra, it does add up over time. If my entry is 1 pip higher than usual for a long position, I'm losing 1.1% if I lose rather than the 1% that I intended to lose. And it also means your take profit is also slightly smaller because your entry is higher, obviously. So I'd make 2.9% instead of 3%. And it doesn't seem like a lot, obviously, but over time, over 50 trades, 100 trades, 1,000 trades, it does add up. And you don't want to be making those small mistakes. You want to keep your expectancy as high as possible so that you can make profit in the long term. That is the goal. We're not focusing on how much can I make, how many TPs can I hit this week or today. No, we want to see over the long term. In the long term, will this be a good decision if I manage my trades like this? That's what you have to consider. And you can also see here on the MetaTrader 5, those are my entry points. I had 2 entries on this because I had a good scale in. As you see, price broke structure to the upside, like I mentioned, and we retraced back in, and we got another entry. Again, this was completely fine for me because price had broken structure, retested. Again, it's just the exact same setup that I had the first time. I just had it again. So the trade I actually would have made, I think 5.5% instead of the original 3%, and obviously meant we lost a bit more, but nothing we can do about it. The main benefit of this, and what I hope you guys can take away from it, is that if you follow the plan, even though it is a painful loss, and you guys might have a similar situation where you lose money, where you could have avoided losing money, if you follow the plan, it's a good trade in my opinion. So even if you do lose, even if you win, no matter the outcome of the trade, if you followed the plan according to your strategy, your trading plan, then you had a good trading day. And that's what you have to think. And as long as you are making solid progress in your trading, with following your plan, maintaining a solid routine, and managing your emotions, that's all that really matters. So I hope you feel some sympathy for me on this position, and I'll catch you guys in the next video.